are going to bring you the most incredible images now.
Panic, chaos and injuries at the Dubai airport to UAE residents who are used to this country being a beacon of safety and stability.
So there's been a war taking place globally, and we've been the unfortunate recipients that have been present throughout that war. And it's one of the reasons we've been a little bit offline and haven't been in the office due to the current geopolitical circumstances. However, it provides a beautiful topic now that things have seemingly settled to come back with another whiteboard video and break down the fundamentals, what's been going on in the market with those fundamentals, and of course the main topic of discussion, which is predominantly manipulation in the markets, which is technically being blamed on the fundamentals right now.
Yeah, so it's been actually a lot longer than we realised since our last whiteboard video, but we have been in the middle of a war zone. Being here in Dubai, you know, it's been a crazy few months to say the least. But on today's video, we want to pick up a little bit on where we left off on the last video, because it actually relates a lot to this video when we talk about market manipulation and trading through a time of war. With the war going on at the moment with US, Iran, and a lot of, you know, scenarios playing out, you know, with oil, gold, all markets have been affected. So we want to talk about that today, talk about how to trade through a time of war in the market, and how it ties back to the last video we've done on the whiteboard, and how a lot of what we showed on the last video on the whiteboard, you know, I drew out the dollar index. It was actually December when we done that last video, and we showed what we expected the US dollar index to do, to come down, take out the bottom of the range, go back up for the third drive to the upside of the range before selling off. And exactly that has played out. So we want to talk about that, and again, just, you know, carry on with market manipulation. And I think today is a good time to talk about market manipulation, because with the war happening and what's been happening in the markets, there's been a lot more talk of manipulation. This is something we've spoken about, you know, since inception with innovation markets, teaching that the markets are manipulated. A lot of people think they're not, but right now with what's going on in the world, it's a buzzword: market manipulation, insider trading. You know, talk of, you know, Trump potentially doing insider trading, Baron Trump, oil shorts coming out of nowhere, big oil shorts or big oil longs before, you know, fundamentals come out afterwards. And as we always teach, the technicals will show you what's going to happen in the market first, and then the fundamentals just come out afterwards. So we'll talk about a little bit about that today and show you how you can trade news of war before it happens and see the footprints in the market to give you that edge. And even with that, before the news broke about the war, we bought, and our members bought, we bought oil at $64 on a Thursday. And on the Thursday, it was because the market started selling off, breaking a range like we spoke about in the previous video. So us and members bought oil at $64. 2 weeks later, it was at $119. So we bought the low and rid that all the way up. We saw an opportunity then when price was playing out here, 0.1, 0.2. We got our sniper entry at $64, and, you know, it couldn't have been better. There's a manipulative footprint that the market always does and always shows, that we want to talk about that with you today, show you it so you can look out for it. And, you know, as I said, make the most of these times of trading during a war, because the same things happen again and again. The same thing happened previously with Russia and Ukraine, with gold. The exact same thing played out. I'll talk about that on the whiteboard today. And then, you know, hopefully we can make it pop up on a few videos and a few past calls where we've actually called that to our members and show you it in real time.
I think even to add to that as well, like what Bernie said regarding the whole concept of manipulation, you've probably seen a lot more recently on X that it's very blatant nowadays. And I think it's very important to realize that market manipulation has been around for a very, very long time. And what we're seeing in the present moment is no different to how markets have operated for decades. The only difference right now is it's just a lot more obvious. And the truth is, it's manipulated. You know, get over it. And it's a thing that a lot of people blame, especially in the current moment. They blame Trump's unpredictability. And a lot of people are, while somewhat understanding the markets are evidently being manipulated, they're also blaming a lot of their losses and the trades that they may have got wrong or caught the wrong direction on the so-called news. And what you're frequently seeing at the moment is, as an example, Trump is unpredictable. Trump is saying this and then he's changing his mind. The reality is the markets are already pricing in and reflecting what is seemingly coincidental or even random in your eyes or most people's eyes to what Trump is saying. It's very strategic, and what you will hopefully realize once this video is finished is how the timing of what is said and what is presented to us is almost exactly what allows price from a technical basis to deliver the next technical move. So in the eyes of most people, they obviously believe that fundamentals are the cause of the market movements, etc. But I would argue from my own experience, and Bernie would probably agree with this as well, it's actually the fundamentals that are merely a justification to move price in the next direction once the technical area has already been fulfilled. And we see this time and time again, and this is pretty much what we'll be showing you in this video.
Yeah, so I think just following on what you said, I know you've said it and probably want to jump onto something, but I think I might just show you an example of how we bought oil at $64. And if you haven't watched the last video we've done, I really recommend you watching it, especially if you look at the last video and 4 or 5 months later, look at what we covered and look at what's happened today. And what we've covered in the last video applies to what I'm going to show you now on oil and how you could have bought oil and a lot of trades in between. The last 3, 4, 5 weeks have been some of our best weeks trading. We've had, sniper entries on EURUSD, 4 in a row, 1,000 pips almost. Sniper entry, 0 drawdown, but catching the exact tops and bottoms of the market because price is being so manipulated right now. And it's at this time during war where the manipulation is heightened.
Can we get price to push down and get into sort of this region? Can we get a long back up into some of these areas up here?
To the decimal, 1.1765 is where price hit the lower sniper zone.
If we push up, I would ideally like to get up to 1.1925 to 1.1940-ish. The sniper level we called out was 1.1925, and you got 1 pip higher. We are looking at a potential move here. The next move down, if that was to break, would be below the previous sniper zones.
We can see here, we basically got the very, very bottom of that wick. So just go back to oil, so it was on a Thursday. So the reason I want to touch on this first is because, as Tori just said, the technicals will play out first because that's where the manipulation lies. Oil, before it made that big push up to the upside, before it went up to $119, just think about it logically. The news broke out over the weekend, and this is something that happens a lot when it comes to war. Russia-Ukraine news came out on a Sunday. The current war that we're in with US-Iran, that news broke on a Saturday. Now, do you think that nobody in the world knew that that war was going to break out on Saturday before it happened? Do you not think that there's insiders, bigger people, higher than us, who know that information and they're not going to make the most of that? So, the news broke on Saturday. So if price is going to go up, what's going to happen first? Price sells off, brings in the retail sellers, brings in that liquidity, and then the big boys buy it. And this is exactly what happened and exactly what I showed you on the last video. And I'll show you this again now. And again, just take this into your trading every day because it works on all time frames, monthly, weekly, daily, 4 hour, 1 hour. What I showed on the monthly time frame on the dollar index on the last video has played out. But the exact same setup played out on oil. So what we had on oil, I can't remember the exact level. Obviously, we bought at $64, so it must have been a few dollars higher. So it would have been around 65, 66. So what happened was price pushed up, made a form of, what most retail traders will call resistance when it pulls back down. But that is not resistance like we showed you in the last video. Resistance or support is only formed once point 2 is made. Most retail traders start entering at point 2. So once point 2 is made, and then price starts pulling away, what does that look like? What do all retail traders call that? What does textbook tell you? They call that a double top. So as we showed in the last video, what we normally see here is a big red bearish candle or a big sell-off. The more aggressive that sell-off, the more sellers that come in and stop losses and liquidity go above here and it builds up. We explained that we never sell from that second point. We always wait for price to go up and take out this liquidity, because 80-90% of the time it will. Again, going back to where sniper entries come from, this is one of the reasons, because as a retail trader at the very beginning, you're taught about a double top. You're taught once you get a big red bearish candle to sell here, stop loss up here, target, maybe the bottom. But then what happens? 99% of retail traders lose. So what happened here? This was earlier in the week. I just clear this back up a little bit. Could you hold that for me, please, sir?
Yes, sir.
On oil, so what we had that resistance, so price pushed up and came up again to create that double top, or what a retail trader sees as a double top. So when price started selling off, we were not looking at selling, we were looking at buying. Because the trick here is, if you know that price 90% of the time is going to come up here to take out the liquidity above, then you can also look for that trade up. Now what happened here on that Thursday is price was, and you'll often see this when price does make a 0.2, price will go into, can I have that again?
Yes, sir.
Thank you. When we do reach 0.2, very often it doesn't just hit and move away. Once it gets to this region, it will start forming a point of consolidation here, because it accumulates both buyers and sellers in the market. So by ranging here, it will, like every time it looks like it's breaking resistance, it brings in more buyers. Every time it pulls back down, it looks like it's bringing in sellers. Then what happened is we had a strong sell-off on the Thursday. If you go back to, can you hold that again?
Yes, sir.
If you go back to our last video and our psychology video, we talk a lot about how the most manipulative candles in the market are a big bullish engulfing candle to bring in buyers, and the opposite is a big bearish engulfing candle. These are the most manipulative candles in the market, because a bullish engulfing candle brings in buyers, and that's often where you see the top, more often than not. Same thing with a bearish engulfing candle. If you go back to oil, before the news of the war came out, and before it broke the $64 or $65 region, when we had this range, so this is on a lower time frame, when we had this range, we had a big red bearish engulfing candle breaking. So what did we do? We knew that that was a false move. We knew that that was manipulative, like this, and we bought here. We bought here on Thursday. So what was happening? Obviously, we don't know the war is going to come out. We don't know the news of the war is going to come out, but we've called correctly the highs and lows on war for the last 2 or 3 times. It happened on oil and gold. We don't know at the time that that price is going to go up and hit $119. We knew that we were just aiming initially for price to come up and take out these 2 highs here. But with this play, you'll see it happen time and time again. And this is where price can run off and make a new trend, because this might not necessarily be the high that's going to sell off. Price sold off here, big red bearish engulfing candle. This is where we bought here. And then on the Friday, what we got was this huge buying pressure on the Friday. Then the market closed. So if the market's not manipulated, why did it sell off on Thursday? There was no need for it. Why did it have to come down, clear this liquidity from this consolidation zone, where there's a lot of liquidity above and below? But it wasn't necessary to have such a bearish candle on Thursday. And then, where we got in at $64, we're at $64, all of a sudden, that day was a 380, 400 pip move to the upside. It moved $4. Now, at the moment, price is doing that in a 1-hour candle. But prior to that, when price was down here in a range for quite some time before the news of war broke out, it would do 380 pips in a week sometimes with oil. It was very small price action, and then all of a sudden now it's exploded. But if price isn't manipulated and you don't believe in manipulation, why did we have to break down with a massive bearish break to the downside first? This brought in a lot of sellers to create that liquidity above here as we expect. As I mentioned, liquidity above here, bring in the sellers. Then we knew we were onto something big, because such strong buying pressure came in out of nowhere. We normally expect that third drive up, but in this case, it flooded into the market. You know, I was expecting price to come up for this third drive. Can I have that again, sorry?
Yes, sir.
I was expecting price to come up for this third drive and then potentially start looking at, once we get up here, then we can start looking at potentially looking for a short if we wanted to. So we're looking for price to drive up for a third drive here. But the fashion that it drove up into this region to take out this resistance, it just had a massive bullish push up on Friday. Now, why did it happen on Friday? Well, one, the selling pressure came in on Thursday to flush out all of this liquidity that was built up, to induce loads of selling pressure to create more liquidity above here. And then on Friday, because the inside traders knew on Saturday and Sunday, the news was going to be released. So all the big boys were buying here. We caught this here because we know how to read this. But all the big boys came in here and this pushed up 400 pips in a day. So that told us, hold this over the weekend. Saturday came out, boom, we ended up, as a Sunday market open, we had a gap in price action from here to here. I can't remember, I think it was $10, $20. Then we held again, and then we held it through the next week. I think a similar thing happened again the following Friday, and then we ended up at $119. Double to 64, basically hitting 100% profit from that buy. Didn't make a full 100% because obviously when price gapped to the upside, took some profit, but continued holding and still holding now. But you can see here that this play happens time and time again. And if you go back, now if I just wipe this off a little bit.
Leave that though, because I'm actually going to use that for my segment as well. It's actually going to pair very nicely.
So just on that, the reason why this is exactly what we spoke about in the last video. If you can hold this for me.
Yes,
I'm very
master.
glad that you're here today. So now I want to talk about here. I just want to talk about that area. This consolidation zone. This was the telltale sign. This is where the trade came from. Not so much, you know, 0.1, 0.2, yes, because we're waiting for that third drive. And this was basically within a range, but it was this little range in here. And like I said in the last video and today, what I'm showing you here happens monthly, weekly, daily, 4 hour. And if you watch this and learn this, you can take these trades. But especially at times of war, right now, it's happening time and time and time again. Every trade that we've caught over the last 3-4 weeks has been something similar to this, where price is in a range, it breaks out of a big bullish engulfing candle or a bearish engulfing candle, obviously inducing sellers because most retail traders think it's breaking to the downside and start selling, but price whips back up, and vice versa. So here, I'll just show this and sort of expand that into a bigger version and a higher time frame. And then, you know, this is, you know, on a 4-hour time frame on oil, if you go and look at the chart. Let's just imagine that this is the dollar index again and where we left off. So I believe where we were last time on our last video, we had made 0.1 and 0.2 on the US dollar index on the monthly time frame. At the time, it was December, we were around here. We said that we're not going to take a trade on the dollar index short until price goes back up to take out this high. But first, again, if you go back and watch that video, you can see we said that price is likely going to come down, take out here to bring in sellers. You know, the more selling pressure here, obviously this is over time, but if you can imagine selling pressure coming in here, selling pressure to break here, to break that range, bring in sellers because they think support's been broken, liquidity goes in above here, and what happened? Price went back up, took out that high, and now sold back off. So again, it's the same scenario playing out again with these ranges. The market consolidates 80% of the time. So recognize that, you know, it can go on a little move on the 1 hour time frame and then it will move sideways. Or it will go on a little move on a weekly or daily time frame and then move sideways. But it's consolidating much more than it trends. So in these consolidation zones, it accumulates and accumulates. But it's these candles where you can make the most money. Mostly you will see either a bullish break to the upside, big green bullish candle, and again, drawn on the last video, if you go back and watch it, and then buyers come in, and then the next red candle will come back down within the range and start aiming to come down to the lower side of the range. Then, you know, this being green, excuse the badly drawn examples, this being green, that'll bring in the buyers, and then
red comes down. This is where you want to be looking at sells, to sell coming back down. Where 90% of retail traders, they're looking at buying here. Then when price comes here and it's selling, most retail traders are seeing this broken support, they're selling here, but this is where you want to be looking at buying to go back up and once again take out the new high of the range and take out this high. Same as what happened here with oil, if you can still see that. Selling, so you buy. The stronger the sell-off, the more chance of it going back up to the upside. But 90% of retail traders will not know that. They think the stronger the sell-off, the more increased chance there is of it continuing down. But the stronger the sell-off, the more higher probability there is for me knowing that it's going to go back up and take out that high. Because the more stronger it sells off, the more retail traders it's bringing in, or the more sellers it's bringing in. Why? Because the markets are manipulated. So it's a constant game of manipulation. Once you understand this, what we spoke about in the last video and what we're covering here, you know, the reason I'm showing this is, as I mentioned, the markets are consolidating 80% of the time. So if you start doing this and going back and looking at ranges, highlighting ranges, you know, resistance and support or a range tool on your chart, and start watching how this plays out time and time and time again, you'll start making far more winning trades and far less losing trades. But at the moment where the markets are heavily manipulated, you'll see this playing out more and more and more. So have a look out for this and apply that to your chart, and you'll start catching these moves. They're happening on gold, they're happening on oil, and they're happening on all the forex pairs.
Yeah, so I'm going to tie this into number one, the oil area in specific, but also to carry on with what Bernie said. A very important thing to note, if we just use this range, it's magnetic, that helps.
Oh.
So this range in particular is very important, but the first thing that Bernie said, which is really important to take note of, is you're not necessarily going to 100% know what news will follow from what the charts are telling you. But the charts will give you a very clear indication. You have two real options. You can be completely naive to it, or you can start to see this and backtest this yourself. And I guarantee you, if you do that and align it with every major fundamental geopolitical event, COVID, anything else,
that's a good point.
Look at what the charts have done before, during, and after. And I guarantee you will find patterns. So the best way to do it is to first of all be humble enough to go, well, I'm probably not going to predict exactly what's going to happen, but it will give you an indication of the severity or what kind of road the news would go down, so to speak. So let's just say here, we go for a major bullish candle, and what's also important to note is using assets like oil and gold in particular, which are heavily reactionary to obviously things like war and anything else that relates to what allegedly moves them fundamentally. So even just using the simple basis, first of all, of bullish and bearish candles, and looking at this in some particular way, and then changing this to a bearish candle, and just viewing commodities in general with these particular larger candles. Now, when you specifically start to see larger bullish and bearish candles like this, and more so like Bernie's illustrated there, that kind of rip through particular, let's say, levels of major resistance, major ranges, all-time highs, whatever it may be, and equally to the downside if a bearish candle, as an example, breaks through. These become your key indications. Now, the key to this is something causing so-called the movement of this candle, or is the candle emerging without anything actually happening? This is very important because if, as an example, you suddenly start to see some form of war news come out into play, which is happening as the candle is being generated, that is a very high probability sign that the opposite is going to happen, and it will actually be ending somewhat soon. Simultaneously, if you see this, and what's really relevant to the current events, is the rally of gold. Now, when gold was rallying over the past, God knows how long it's been rallying now, but gold's been ripping, and one of the main questions that people have had is, why is this happening? What is this telling us? What are the underlying signs? The key to gold's rally, if we were to look at this huge, and more importantly, more aggressive surge that started to take place over the past few months, with no real justification from a fundamental basis as to why it was happening besides speculation, seeing that happen is telling you already that the market is pricing in something. And when you see that aggression in the final stages, what did gold actually do when the war really started to erupt? When it's most logical for gold to go up, when you actually get the news of a war escalating, gold did not do that. And instead, in that area where the news gets triggered and everyone goes, this is it, it's going higher, gold then dumped aggressively straight away.
And I think that actually even became a bit of a meme on like IG and X, because when this gapped to the upside on that Monday, everyone started selling gold. Buying gold, thinking it's obvious.
10k gold.
Yeah, it was obvious. And on that Monday, a lot of people started buying, but it just continued going lower.
And just got blitzed.
Yeah.
And that's what's crazy. You know, even that in itself for me is such pure evidence of market manipulation, because for most people, they're looking at that rise and going, what does this mean? What's coming? And you're probably thinking something worse is coming. But then when something worse actually gets presented to us in the media, Lord behold, the market actually then drops. And this is a clear illustration that instead, because there was no fundamentals, this is telling you it's pricing in fundamentals you haven't heard about yet. So when those fundamentals are coming, you should be looking at this rally with no fundamentals as a clear indication that something is going to happen to bring this lower. If it was happening with the fundamentals in play, then there's slightly more of a justification that it could continue a little bit more, because it is technically pricing it in the moment. But when you see things being, again, remember this, everything's being priced in with or without news, with or without a justification, with or without a narrative, it's being priced in. But if there is something to pair with that pricing in, like news or something you're told on Bloomberg, then there's more of an incline that something is actually going to happen in the inverse still, but it's going to be a bit more stable. The same applies to looking at this with oil and gold. Now, as an example, before the Russia-Ukraine war kicked off, and I believe we've covered this in a few videos now as well, gold printed a fat bearish weekly candle like this.
And again, it was in a range.
Exactly.
It was in a range for
it
quite a
ripped
while,
it.
and then it broke down for a week or two just before.
Yeah.
And again, we called that long.
And that
because of what it was doing.
Yeah.
Again, just to jump in, is like, but it's because it started breaking out of the range so bearishly and so strong. We knew, trust what we're teaching here, buy, and you know the fundamentals will catch up. And is the point that Tori's basically trying to prove, or we're trying to prove right now. We knew that even though it was breaking to the downside and it was breaking down very, very strongly, we knew in this system, we know this works, 80-90% of the time. And again, the stronger it was breaking down, because I think it had a week or two of bearish candles, so on a daily time frame, it was really selling off. There was 2 times on oil. I don't know if it's the previous one. On gold. But again, we spoke to each other. We said, like, gold is selling off. It's time to buy. That's how we think. Again, so we'll go to, sorry to jump in. But again, when, I think we might have spoke about this before, but when the pound, GBP, broke to its lowest level ever, we were on the phone to each other in the morning saying we need to buy pounds. We had a lot of US dollars, so we converted 250,000 from US dollars into GBP.
Good times.
Yeah, but when there's a big crash like that, we're on the phone to each other saying it's time to buy, where most retail traders are getting the hell out. When gold dropped and broke that range, we spoke to each other, said it's time to buy. We need to aggressively start buying. We bought that break to the downside, and the rest is history. I mean, we've never come back down to those prices since.
Yeah, true. And that's literally such a perfect example as well, because when that drop happened, there was no news for that drop.
No.
It was completely random, just blitzed through the range. Out of nowhere, everyone's going, oh my God, what's going to happen? And immediately, of course, the psychology of traders is support gets broken with a massive candle. Support's lost. Again, people are very narrow-minded in trading, mostly due to where they've acquired their education, what they've read from the early days. But a lot of what we're taught is actually a lie and a trap, especially in the early offsets. You're taught the basics, but the basics do not work. And if they did, we would all be billionaires from trading the market if breaking support was that simple. But that's actually the simplistic way to manipulate most traders.
It was the best lie ever told.
Yeah,
basically.
Obviously, there are times where a resistance or support will break, but more often than not, the more aggressively it breaks, the more likely it is it will actually reclaim that level. And a good example of that is what Bernie showed with the Dixie in the previous video. It liquidated the range of aggression to the downside. Why didn't it go lower? It immediately went straight back up to the range highs to fill that double top. So you can use these as examples because this was an indication with gold when it suddenly ripped through those lows that something is very likely going to happen geopolitically to bring this back up, because it's normally something war related that really contributes to gold's growth. Now the key of this is looking at these assets and their price actions specifically on a weekly or monthly time frame for these potential patterns, because they can give you very easy indications again of what's going to happen, not just to these and geopolitically, but to surrounding assets that can be impacted. And this is actually something I was using recently in the range with crypto, exactly in that level with members we covered, breaking out of BTC's range. Oil was looking bullish. Now, I don't really look at these charts too much because that's Bernie's forte, but in this particular window of war, I looked at this and was like, I think oil's going to go up. Bernie said, me too. I was like, cool, we're on the right path. Lord behold, it then happened from there. So you can use these for assets that are impacted. As an example, you see gold drop out of nowhere, nothing to back it. A war is probably coming or something is going to happen. Basically, again, in simple terms, that's what happens. Oil suddenly drops. Well, what's going to make oil go higher? You don't need to be the Einstein that predicts exactly what happens, that Iran's going to launch this many drones or this is going to happen. But we were living through it and saw the real life presence of it happening. So it was a bit weird to witness.
It was a very strange time to have bought oil. So just we're
profiting on the pain, essentially.
Yeah, well, we'll throw this in there while we're talking about it. But I mean, I bought oil on the Thursday. Friday, it went up. I was actually by a pool. It was actually nice times. I was 400 pips up. I went somewhere on the Saturday and all the news broke out. And then on Monday, it gapped up. Because of the time change, I was up at 3 a.m. to see what this gap was going to be on market open. I was up at 3 o'clock in the morning here in Dubai, and it was strange on that Monday, Tuesday, Wednesday. Because normally when you're trading news of war, you're not involved in it. But in this scenario, we were right bang in the middle with missiles flying over our head. So it was a little bit of a strange one psychologically to be in that and think, what the hell is going on here? But I just thought we'd throw that in as what actually happened at that time.
It was legitimately, it has been a hard time to bet on the fact it's going to escalate whilst you're in the area where it's going to escalate. It's been very strange, to say the least.
Because your mind wants you to say, like, you want this to stop. So on Monday, Tuesday, hoping that Trump would come out and be like, it's done, which you want. And then, you're in a long trade on oil and it keeps going up. And it was a very strange time.
It's been a very strange time, to say the very least. But it's interesting because in this particular window, there's several ways this is interlinked with crypto. Number one, again, why is crypto really pegged to what's happening with war? No one really knows. Should it really be relating and moving to it and reacting to it that much? Not necessarily, but the more it's become integrated within the traditional finance system, the more it started getting interlinked with particular geopolitical events. But there's several parts to this. The first part to this is breaking down the psychology of what happens when there is no news. And again, this goes back to what happens prior to any justification of what's going to happen next. But crypto has been in a steady decline now. Obviously, since the October crash, it's been in a steady decline. We had the liquidation event. That obviously was a big catalyst for a drop down lower. However, as we got to the 60K region, the news got deployed exactly as we rejected from $60,000. Now, psychologically, of course, most people at this point are fully inclined for the 50s, the 40s, the 30s, etc. So naturally, when you've already got... So yeah, I know, I was just running down. But if you think about this move down is doing one simple thing the whole way down. People naturally shift. And if you actually even combine this with the liquidation event from that time, we called that perfectly. Now, granted, we didn't really anticipate it to go that extra little squeeze down to 60, but we factored it in and it was part of the overall move. And when you consider at that time, it done exactly what Bernie is saying there and showed on the Dixie. The liquidation event popped up the high. At that moment, the high was taken out at 125K, a liquidation event takes place and slams it down. So all of this is swerving people's sentiment to the downside. And naturally, the people that wanted 200K up there begin to start looking as we get down below the 100K threshold, lower and lower and lower. So as the news of war broke out, why is it crypto stabilized and then started to recover, achieving almost $80,000 now. When you've already have, same as gold, rising higher with no real justification, the positive news to pair with the top caused the drop lower. With BTC dropping all the way down, and we kind of had a window between, let's say, 100 to 90K all the way down to 60, where there was nothing really contributing to the drop at that point fundamentally. So then when you get negative news with already very negative prices paired and a 50% drop on Bitcoin, the opposite happened once again. And since that war has been initiated, crypto has not gone below that price point. But this actually brings me to the next point, because using oil in this circumstance, once we got into the range, we then saw the first impacts of war on crypto. And again, it raises the question of what I call coincidences in the market. Coincidental timings of things taking place. So once we've now broken out, let's say from here there's a massive trend line which we've now broken out of, or we're about to break out of. Crypto's come in, it's come down, and it's got into this region. We created a range, and what's happened is just as we took out that initial range high, around 70K, it was exactly at the moment that oil dropped. The moment I saw that, just as Bitcoin had taken out that high over there, I said to members, I think we're going to go back down to the lower end of 60s. And it was because I saw this and then realized that the high was taken out, that if there was going to be an impact from any form of geopolitical event, it was going to be in this very moment once the high has been cleared. Because what is the reasoning for that? What is the benefit and justification, and what's happening psychologically? When a range has been formed for enough time and the sentiment is already bearish in the channel, the break of the existing weekly high is where buyers begin to jump in. Simultaneously, it's where all the shorters stop losses are, very similar to that example there. So the market has now wiped all the shorters out. It's finally brought some confidence back in. And at the very moment oil begins to propose there's going to be a move higher, I looked at it in exactly the same way Bernie was. And I went, well, if this has gone down, shit's going to pop off. It did. I heard it. I saw it. And what happens to crypto? It goes down into the range lows. Yet it did not take out the low, and still hasn't. It simply brought it back down. But the fear of the war is what stops people from buying a second time and have now missed a great opportunity. Now, the key is the current area for crypto, and this is probably the most important part right now, because the market's in an area where we're having a lot of talks about ceasefires. And if we were to draw the overall trend line, which is very important, since the liquidation event, the market has officially broken this trend line now. So we have gone from a very specific window, and this happened during FTX and this happened during COVID. So there's still a possibility this could happen. And we can use this single trend line to know exactly what would happen in the worst case scenario. So let's say now we've had the liquidation event, we've come through, we've created the low at 60K. And now all of a sudden, we have finally broken this trend line. We've finally blitzed up higher and broken through, and we're now situated just below the 80K threshold. Now, in these areas, there is always a very simple risk that the market could potentially go back to the trend line one more time. The fact it's now broken is already bullish confirmation, but what can often happen, and again, COVID and FTX, this happened, this is where the buyers begin to jump in on the breakout. What this can often indicate, specifically if you see a potential sign on gold or oil that they are going to go higher, this could be your sign. And what you simply need to watch for at this moment, because this is where it no longer becomes bearish in any way, shape or form. Instead, if something is to happen, let's say between the 80 to 90K region, and something escalates, it would very likely mark the final drop and the end of the war. And what that means is something could still happen here in this window for price to come back down, either back to the range lows or slightly take out the low. And the longer this takes, the lower it goes to take out that low and retest that trend line. In the eyes of most people, they would see price break the low and go, oh my God, big bearish candle, breaking the low. So you just want to keep your eyes peeled for this, because just in case it happens, if it does, you do not want to be psyoped by the negative news, because this is exactly what's happened several times before. Exactly there, exactly there, exactly there. So if you were to quickly see BTC at this point, suddenly dump in one or two aggressive candles to, let's say, 60K to 50K, that would likely mark a Pico bottom if it hasn't already marked it. And if anything, you want to use this, what we're teaching you in this video, as an understanding to acquire the knowledge to utilize these opportunities to your advantage. So I've essentially just taken everything Bernie's shown you and I'm just applying it to the current situation as well, because we are seeing a lot of back and forth. Peace talks, ceasefire, fighting, they hate each other again, it's all going on back and forth. If you focus on that news, you're just going to be distracted, you're going to be confused. The news is intended to confuse you. If you instead look at the charts from the raw technicals and understand where any news could take price, if this is to happen on Bitcoin, that will be the additional buy of a lifetime outside of the areas we're already within. And I guarantee you, if we were to see such a situation occur, based off the escalation of war, that would mark the bottom around 60 to 50K. What would then happen in very likely a few weeks? It would then start to blast up to 100K all the way back to the all-time highs. So we're in this little window here where there's definitely somewhat of an open risk that could still occur over the course of the next few weeks. If it doesn't happen over the next few weeks, we're probably in the clear. But in these specific windows, this gives you an idea that things can happen. So it's best to take it into consideration. But it completely explains the logic because it's already invalidated the bearish trend. And this is what I use predominantly when it comes to understanding fundamental manipulation in crypto. Highs and lows are crucial, but trend line breaks on a weekly or monthly. If the breakout occurs and you get confirmation before the fundamentals can deliver the retest to the trend line. That then marks the Pico bottom.
Yeah, so essentially, what we're trying to teach here is how to trade through a war situation or how to predict a war. I know that might sound crazy, but we've done it on gold twice, we've done it on oil many times. Members will be able to attest to that. But essentially what we're trying to show you is, this can help you massively right now. We're talking, big moves like oil, gold, Bitcoin, crypto, etc. But it also applies to a day-to-day time frame as well. Obviously, these are massive geopolitical situations. We didn't expect oil to go from $64 to 120 in 2 weeks. But this setup, this same system, I live and die by on almost a daily basis or a weekly basis. I'm very selective with my trades. I wait, I'm like sniper entries. And going back to what I mentioned, on Euro USD, the last 4 trades we had on Euro USD caught the pinpoint high of the week and the pinpoint low of the week 4 out of 5 weeks. And it was not a decimal lower or not a decimal higher. So it was in fact factually impossible to get a better entry than us. And the reason being is because I live and die by this. Because, for example, just to finish off and just to reiterate what we're teaching here, and it's not just times where you have to wait and use this, at times of war like now, which obviously explaining to use it, but also on a day-to-day basis. So, for example, 4 out of 5 weeks we caught the pinpoint top and bottom on Euro USD. Now, Euro USD is also manipulated on a daily basis. Obviously, oil and gold are more manipulated at times of war, but the whole forex market, and this is what we're going back to, we were saying at the start of the video, we've always explained the market is manipulated. Some people won't believe it. Some people will take years of being stopped out and being manipulated until they realize that this is just the most manipulative market in the world. So we've always explained that since day one, market is manipulated. But if you use that manipulation to your advantage, you can make a lot of money in this market. Now, EURUSD we took 4 trades in 5 weeks. To get the pinpoint decimal top entry, sniper entry on a weekly candle, how did that candle look? So obviously, for a weekly candle, to catch the pinpoint top of a weekly candle, at one point it would have looked like that. Mm-hmm. At one point there wouldn't have even been a wick, because as it's pushing up, it's pushing up like that. So then we've got sniper entries, premeditated sniper entries, which are given out days in advance. So hopefully this connects. No, it's going to be, yeah,
close enough.
Close enough. But, well, it's not actually, because what I'm saying is it wasn't even a pip over. So at one point, the candle looks like this. extremely bullish as it pushed up, but we've got a sell order here. Then price pulls back down, or creates price pulls back down, creates a wick, and rejects our level. Now we've entered here and got a sniper entry here. Then price has sold off. Let's say this is the weekly candle. Then price has sold off, and then a week later, price sells off. Big bearish engulfing candle. At one point, it would have looked like that, no wick. We've got a buy order set here. Price rejects. This pulls back, and then again, please allow my badly drawn drawings. But again, prices reject our buy area, and price pulls back up. Now, in order to get that sell and in order to get that buy, it's because we know the markets are manipulated. So, you know, when that was pushing up and that was fully green, what's everybody doing? Everybody is buying. Everybody's buying, because it's like what we just showed you before we wiped it off. Price is pushing up, big bullish engulfing candle, green, everyone's buying. But why has it hit this level and why has it sold off from there? Same thing with the bearish engulfing candle. It was completely bearish, no wick to the downside, hits our level, pulls back up. Because we know from what we're teaching, one, we know where price is going, so we know where to buy and sell and have those orders in. But two, what gives me even more confidence when it's happening is when we get the big bullish engulfing candle. Our members now get excited, like we go on live sessions, and for example, USD pushing up, it'd be very, very bullish. And I will say to members, like some are new, some are old, I'll say, who's scared? Who's worried about this candle? It's like a complete bullish candle hitting our level. Who's worried? Some will be like, yeah, I am a little bit, and I understand because it's a big bullish engulfing. But then over time, you start to rewire your mind and see that this is all just manipulation. The stronger and bigger the candle, the more chance it's going to flip. And the same thing with the bearish. And then we've done that, I won't keep doing it, but we've done it 3-4 weeks in a row and got, as I mentioned, there wasn't a pip higher. There wasn't a decimal point higher that you could have got there, and there wasn't a decimal point lower that you could have got there. And we've done that for 3-4 weeks and continue doing that now. But how are we doing that? It's because the markets are manipulated. So what we're showing you is, you know, that setup that we're showing you is like gold dust. I said that in the last video as well. And hopefully you guys have gone back and done some homework and just look back. And we look, as Tori said, you can even just go to ChatGPT, whatever it is, find out the dates that the war started, and then go back and look at the charts. Look at gold, look at oil, the exact dates of all the last previous wars, and look for the manipulative footprint in the market. And just before we finish off, let's revert back to what we said at the start of this video. It's all about manipulation, and there is insider trading. Yes, it's a buzzword now because, you know, it's all over the news at the moment, but it's been happening for years, like Tori said. But with insider trading, there's footprints in the market. It leaves the signs behind. If you can figure out how to read the signs like we're showing you now, you've got that edge in the market. With insider trading, there will be sell-offs before the buying. The selling has to happen to induce all the retail shorts that get brought into the market, who are just used as liquidity before the big boys get in and have their longs, just like we showed you on oil, just like we showed you on gold, and all the examples. But it's the same thing that happens time and time again. The market is very repetitive, but people just try to make it more complicated than it needs to be. If you can understand, if you just think about a footprint, that, you know, if you're looking for a sign of to follow someone in the market, it's the same thing. To follow the whales, so to speak, in crypto, or follow the big boys. The candlesticks literally leave footprints behind of what they're doing, and when you can see and learn what the footprints are, that's your edge that we're teaching you here. That you can use on monthly, weekly, daily time frames for the bigger moves like we just spoke about, and during war, but you can also take this down to the 4-hour and 1-hour time frames, because the footprints continue the same on FX markets on a day-to-day basis, and then, you know, higher time frame markets, higher time frames, and you have the big geopolitical moves. It's the same footprint that we've said in the last video and in this video as well. The ranges, the big breaks above or the big breaks below, bringing in buyers, bringing in sellers before price tops out and then comes back down and sells back down the other side, and vice versa. These are the footprints the manipulative footprints of the market. And if you can start spotting them and start identifying them, and I guarantee you will, because I know they're there because we've traded them, and so we're trying to pass on that knowledge to you so you can see it. We're in a time of war, and we're seeing this happen time and time again. So if you can start applying this to your charts, you know, on the smaller time frames, you'll get some great trades, but also, you know, before the next big moves happen. You know, oil, is it going to go higher? Is it going to go lower? Bitcoin, gold, the next moves. The market has a big pump, a big move, then it consolidates, like I mentioned. 80% of the time it's in consolidation. It consolidates, it gets boring, people lose interest, especially in crypto, for example. But in gold, oil, forex markets, you know, it gets slow, the volatility slows down, not much happens, then a big break of the range, everyone buys and sells, and then boom, it goes the opposite way. First move is nearly always the false move.
Bernie put it perfectly as well, just to wrap up and summarize from my side. Follow the footprints, not the narrative of what the footprints are. Like Bernie said, you know, if you're following a trail of footprints and comparing it to the markets, the footprints are leading you in the right direction, but every bit of information you're consuming is unnecessary noise. If you follow the footprints, you will get to the destination you need to go to. But if you stop at every single footprint and someone's telling you it's a dinosaur's footprint, it's a dog's footprint, it's a cat's footprint, you're going to get stuck and you're going to be too concerned about what that footprint means. The reality is the footprint is guiding you in the direction, and follow it. You don't need to know where it's going to lead you, but you know it will lead you there if you follow it. That's my perspective on it anyway. The markets are doing the same thing time and time again. It's a complete routine set of characteristics, and more often than not, it's doing exactly what Bernie showed with those bullish and bearish candles in particular around key trend lines and key highs and lows. And if you go and look back at yourself, you will identify the patterns immediately and then suddenly realize none of this is a conspiracy.